In this video, I'll analyze the Q2 FY26 result and Concall of Capri Global Capital. So let's start with the company overview. So Capri Global Capital is an NBFC. They mainly offer gold loan, affordable housing loan, then MSME loan and construction finance. Okay, and if I look at their AUM mix, then 40% of their AUM comes from the gold loan segment. Then 20% from affordable housing finance, 20% from MSME and 20% from construction finance. Okay, and to be very honest, sometimes it one thing bothers me is that the construction finance book, because we all know that what has happened in the past in this segment. So that is the one thing sometimes bothers me about this company. But again, if we look at their track record, if we look at the management commentary, they are very confident about the asset quality of that construction finance book. And if we look at their ticket size also, their ticket size is very small, 17 crore, 18 crore average ticket size of that construction finance book. So more or less, I mean, sometimes it bothers me, but again, if we look at their track record, they have managed it very well over the years, and the management is pretty confident about this book. So and this is what it is. If we look at their AUM mix, then 80% of their AUM is retail AUM, and another 20% is construction finance, which is non-retail. Okay, so that is the thing. So let's see what happens. We have to be very cautious in this segment. Okay, that what is going on in this segment, what is not, because we know that 20% AUM is a big number, and if anything happens in this 20% of book, then we know that what happens in financials. Okay, so that is the thing. If we look at their geography, they are present in 20 states across India. So they are fairly diversified in terms of the loan book. Okay, so in terms of the loan book and the geography. Okay, so that is the company overview. So let's talk about the result. So if we look at their AUM growth in this quarter, they registered a AUM growth of 40%, which is a really good kind of a AUM growth, and they reported a AUM of 17,000 crore. And if we look at their past few quarters, they have been growing at a rate of 40-50% over last few quarters. So it is very good. They are growing at a very good pace. If I look at their segment wise AUM growth, then again, gold loan in this quarter grew at a very high pace of 60%. Then affordable housing finance book grew at a pace of 37%. Again, construction finance grew at a rate of 50%. Only one book, one part, which is MSME segment, grew at a lower rate of 17%, because we all know that what is going on in the MSME segment, MSME finance segment. If we look at SBFC, SBFC is doing pretty good, but if we look at 5-star and companies like that, all the management are cautious about MSME lending. So Capri Global also is doing good enough, but little at a lower rate. Okay, so MSME segment grew at a rate of 18% in this quarter. But the standout is the again gold loan segment, which grew at a very high pace of 60%. So that is a very good thing. Gold loan, if we look at the gold loan yield from the gold loan segment, that is very high at, I think it is around 18%. Okay, whereas if we look at the overall portfolio, the overall portfolio is 17%. So if the gold loan segment is growing at a very high pace, very good pace, then obviously going forward it will drag that portfolio yield upward. Okay, so that is one thing. So let's see what happens in the gold loan segment. They are going pretty good. If we look at their guidance also in this quarter, the management upgraded the guidance of AUM growth. If we look at the earlier guidance was to grow at a rate of 30% in FY26, but they upgraded the guidance to 40% AUM growth in FY26. And if we look at FY27, they are again guiding us for a 30% growth in FY27. But for this year, for FY26, they are guiding us for a 40% growth. If we look at the last two quarters, H1 FY26, they grew their AUM by 40% in last two quarters. Okay, so they are expecting similar kind of traction going forward in this FY. Okay, so that is the thing. And one another thing, I mean, if I look at FY27, they are guiding us for a 30% growth rate. Okay, but I think they can also can grow at a rate of 35-40% in FY27. Why? Because if we look at their branch expansion, okay, if we look at their branch expansion, earlier in this year, they gave a guidance of 200 branch in FY26. Okay, but now if we look at the H1 FY26, they have already opened 110 branches in H1 FY26, and again they are giving a guidance of 200 more branches in the coming two quarters. Okay, so again in terms of the branch expansion, they are increasing the guidance, they are upgrading the guidance by 50%. Okay, so that is another good thing, and that is why my belief is that they can grow at a higher pace in FY27 also, like 35-40%. So that is the thing. And one another thing, the management is saying that out of these 200 branches which they will open going forward in this year, 150 of them will be gold loan branch. Okay, so that is one another good thing, that gold loan, they are really focusing on the gold loan segment. Okay, and obviously if the gold loan segment is growing, it will drag the portfolio yield upward, because the yield because the yield from the gold loan segment is higher than any other segment. So that is one very good thing. That is why I think going forward in FY27 also, they can manage to grow at a rate of 35-40% in spite of only 30%. Okay, so that is a very good thing. They upgraded the guidance, and we all know that if the management is upgrading the guidance, then obviously the company is moving in a right direction. The management is pretty confident about their company. That is what is it says. Okay, so that is all about the growth. In terms of the disbursement also, in this quarter the disbursement was very healthy. I mean, the disbursement grew at a rate of 60% in this quarter. So that is one another very good thing with this company, that they are also in growing their disbursement at a very high pace. So that is the disbursement number. And if I look at the asset quality, because when you are growing at a very high pace, when you are growing your AUM at a very high pace, obviously if you are driving a car at a speed of 200 km per hour, obviously the chances of accident becomes high. Okay, so we have to look at their asset quality also. And if we look at their asset quality now, and if we look at their GNP, okay, in the last few quarters, if we look at their past few quarters, the GNPA have been very stable. In this quarter also, GNPA improved by 30 bps year on year, which is a very good thing. a very good thing. And if we look at the NNP also improved by 30 bps year on year. So despite of growing at a higher pace, they are able to maintain their asset quality. That is a very good quality of a NBFC, of an NBFC. Okay, so that is the thing. Asset quality is very stable, it is improving. If we look at the segment wise asset quality, then gold loan segment, if we look at the asset quality of gold loan segment, which is around 40% of the portfolio, uh, gold loan segment improved, GNPA improved in the gold loan segment by a very good margin. If we look at Q2 FY25, the GNPA was at 1.1%, whereas in this quarter, the GNPA was at 0.6%. So 50 bps of improvement in terms of the gold loan. Then if we look at the construction finance, which is very important, because as I said in the opening remark also, that we have to look at construction finance portfolio very closely. If we look at the GNPA in construction finance, it is more or less in a similar range of zero point 0.5, less than 0.5. So that is a good thing. Housing finance, if we look at the housing finance, it is stable year on year, quarter on quarter. So overall, uh, asset quality is very stable. They are doing really well in terms of the asset quality, because if we look at their growth rate, they are growing at a very high pace of 40-45%. So it is very important to look at their asset quality also, because at a higher pace, accident become more common. Okay, accident, the probability of accident becomes more. Okay, in terms of the credit cost also, if we look at the credit cost improved quarter on quarter, year on year also more or less it is flat. If we look at the credit cost by AUM, it is around 0.6%. Okay, and if we look at the guidance of the management, they are expecting a credit cost of 80 bps to 90 bps going forward. Okay, conservatively 80 to 90 bps going forward. So yeah, all all is well. I mean, if we look at the asset quality, there is no problem in this company. So we have to track it every quarter where that asset quality is going. So that is the thing we have to do. So let's talk about the portfolio yield. If we look at the portfolio yield, it has been improving, um, has over last few quarters. If we look at the last year, if we look at the last year, I mean year on year, portfolio yield improved by 50 bps, which is a very good kind of improvement. Mainly, as I said, if the gold loan segment is growing at a very high rate, and if we look at the AUM mix also, asset mix also, then if the gold loan moves from where it is now, around what, 37-38% towards like 40-45%, obviously portfolio yield will improve in going forward. And one thing the management is saying that, or guiding us, that they are expecting a 20-30 bps of expansion in portfolio yield. Why? Because of the gold loan segment, and one another thing is that housing loan segment, they are going for more high yielding loans. I mean, if we look at if we look at the portfolio yield, then affordable housing finance, they are targeting a yield of 13.7% in affordable housing finance. Okay, whereas now if we look at the current yield, it is around 13%, 13.3%, and they are targeting a yield of 13.7% going forward. So in the housing loan segment also, they are expecting a improvement in terms of the portfolio yield. So that is why the management is expecting a better portfolio yield going forward. Uh, going forward in the year, they are expecting an improvement of 20-30 bps of bps in the portfolio yields parameter. Okay, so that is the thing. In terms of the cost of borrowings, if we look at the cost of borrowings, then uh, it has been, if we look at their past few quarters, it has been in the range of 9.4 to 9.8 percentage, and the management is expecting a better cost of borrowings going forward in this FY. They are expecting a 30 bps of improvement in terms of the cost of borrowings. Their current cost of borrowings is at 9.6%, so we can expect 9.3 9.2% of cost of borrowings by this FY, by this end of this FY. Okay, so that is what we can expect in terms of the cost of borrowings. Okay, and because all of this, if we look at the improvement in the cost of borrowing, if we look at the improvement in the portfolio yield, obviously spread is going to improve going forward. The management is expecting a improvement of 30 to 40 bps in terms of the spread going forward in the year. Okay, so that is another good thing. And if we look at the spread also, so if we look at the past performance, in the last year, I mean Q2 FY25, the spread was at 6.7%. Now it is at 7.4%. So there is a improvement of 70 bps year on year. So that is what is telling us that where the company is going and how well the company is doing in terms of the asset mix, in terms of the cost of borrowing. Okay, so more or less very good in terms of the portfolio yield, cost of borrowings and spread. Companies expecting a positive movement in this three parameter, which is very important. So again, if we look at the operating leverage, cost to income, then it has been improving drastically if we look at past few quarters. Because if we look at the cost to income, last year Q2 it was at 64.3%. Now it is at 49.4%, and the management is also guiding us for a 48 to 50% of cost to income in this year. So cost to income has been improving drastically over last few quarters. Why? Mainly because they opened gold loan branches very fast in past few years. Okay, so that is why those branches are now maturing. More loans will be disbursed from those branches. So obviously from those branches we will have some operating leverage. That is why the cost of income is coming down, and the management is guiding us for 400 bps of improvement in terms of the cost to income going forward in FY27 FY28. So we can expect a 45% of cost to income going forward in FY27 FY28. So that is really a very very good thing if if a company is able to improve their cost to income, and nothing like it. Okay, and obviously why the cost to income is improving, mainly because of the gold loan branches which they opened a few quarters back. They are now maturing, they are now disbursing more and more loans. So obviously that is the thing. Then if we look at the ROE, so obviously if a company, if a NBFC's spread is improving, then cost to income is improving. So obviously one thing is going to be pretty sure that ROE is going to improve. Okay, and if we look at the guidance, they are they are very confident of ROE of 16, 17, 18% going forward in FY27. Now they are at 14.4%. So that is the thing. We can expect a better ROE going forward, because obviously the management is expecting a better spread. The management is expecting a better cost to income. So obviously it will flow to the ROE. It will flow to the bottom line. Okay. So we can expect a better ROE going forward. Obviously this will happen if every parameter, I mean the asset quality remains stable going forward. Obviously ROE is going to improve from here on. Okay, now it is at 14.4%, and the management is expecting a ROE of 16-17% going forward in FY27. Okay, so that is the ROE. In terms of the NIMs also, if we look at the NIMs, obviously if the spread is improving, obviously NIMs will improve. If we look at the NIMs, in this quarter they reported a NIM of 9.5%, a year-on-year improvement of 110 bps, which is huge. I mean, nothing to say, absolutely very good. They are improving all the parameters they have in terms of NIMs, in terms of spread, in terms of cost to income, and that is why the ROE is improving. And if we look at the PAT also, in this quarter they grew their PAT by 143%, huge kind of operating leverage. I mean the AVM is growing at a rate of 40%, and they are growing their PAT at a rate of 150%, which is like nothing to say. In this quarter they reported a PAT of 235 crore. So yeah, the company is going in a very good direction at a very high pace also. So that is the thing. And if we look at the guidance, if we look at the PAT guidance, the management is guiding us for a 850 crore of PAT in FY26, out of which 50% have already achieved. So they should easily achieve the 850 crores of PAT in FY26. Also they should surpass the level of 850 crore. Okay, and if they can achieve that 850 crore, which is a growth of 77% over FY25, and going forward in FY27 they are expecting a PAT of 1200 crore, which is a growth of 40% over FY26. So obviously if the AUM is growing at a rate of 30%, if they can grow their AUM at a rate of 30%, then they will have some kind of spread improvement, some kind of cost to income improvement. So obviously they can grow their PAT at a rate of 40% over FY26 easily. They should surpass it again in FY26. So that is the thing. The company is going in a very right direction. I mean in all the parameters I don't have any kind of complaint. Just one thing sometimes bothers me is that construction finance book. But if we look at the track record of Capri Global, then obviously they are doing very well in that portion of the book. So that is the thing. So let's see what happens in the coming quarters. The things are moving very well. If we look at this quarter result also, a great set of numbers. I mean one of the best NBFCs currently. Surely it is one of the best NBFCs currently. If we look at the valuations also, valuations are pretty low. If we look at not low but pretty fair, if we look at the PB ratio is around 2.8x for a company which is growing around 40%. and PAT is growing at a rate of 100%, more than 100%. So overall a very good result. They are doing consistently well from last few quarters. So really it is a very good set of numbers. So that is the thing, we have to keep tracking this kind of companies. So let's see what happens in the next quarter also. So that's it for the video. Thanks for watching.